Good morning, everyone. This is Anne Marie with a quick market update, taking a look at the market. So many of us are struggling, right? I've been coaching a very long time, and once in a while, people who aren't my students will begin to write excessive emails. And this is one of those pockets where I am seeing a lot of conversation. And so it comes really from the slop fest that we're in because we were spoiled by a trending space in the market through the year last year, and then we hit October, and pretty much, although the charts have grinded forward, they are still extremely sloppy, and we're looking for expansion, something beautiful, and we really are not seeing it. So let's take a look at what you can look at. And I do want to say below here is the RSI. It's called the Relative Strength Index. Most every indicator out there that's momentum based you can use in some form or fashion, but I look for things that are relatively reliable, and I want to show you a little trick about taking a look at an RSI and saying, can I use that? See all these jagged points? We get a little flustered by them sometimes because we say, I don't even know what that means right there. The simple thing, as I was telling folks last night in a really great webinar that we had for members, the trick is as you begin interpreting your momentum event, you're to look at your RSI formation and see if you can draw a line through it. So let's look at the current one, interpreting what's next. Here's what I see. Garbage, mostly, but let's take a look. I'm going to try to describe what I mean by this. So here we have a line, and I'm going to put a line through the majority of the range of motion in the chart right here, what I see so far. Now, let's take a look at it. We can see underneath we've got a little bit of flattening here, and then a dip down again. So we have a sloppy bottom, and the top is also a little technically divergent because this peak moved up just a little bit higher from a price perspective than this peak down here with the RSI. Now, some of us leave these formations that we're looking at to use as technical indicators so very small that we really cannot tell what it is that we need to be looking at. Look at your technical indicators so you can understand and get a feel for the flow and the rhythm of momentum. So we have this, and then all of a sudden it bounces, and it bounces into a new line. And so we can adapt that line, and we still see that overall, if we just look at the peaks at the top, we have negative divergence. So the chart continues to creep up, but the market continues to lose momentum beneath. And you can tell that very obviously by taking a look at the RSI. So you can draw a line through the middle, you can draw a line through the tops, you can draw a line through the bottom, but the simple question of do I trade here can be answered by do I see a slope here? Is this a slide that I'm going to have fun going down if I decided I was at the park? If it's not, probably don't want to trade it on a trend, right? And same thing, if I'm looking at something moving to the upside like this, just so long as it holds, I know when I get into my resistance level, if I have slope overall, I am going to breach. Now here's what's happening. I'm moving up continually, but I am also losing momentum as expected. Well, I do expect it to lose momentum up here. We're at the top of a 5-6 year formation, so it's very natural that it's going to be like this. So now we're taking a look at this. What's going to happen today? Job numbers are coming out. We'll be thinking about that. Don't get in front of trades, folks. You know, I read a great email from someone today who said, hey, listen, I know what's going on, but I know that I'm set in my ways, and I know I consistently make mistakes I should not, and I am concerned about how to break the pattern. That's somebody who's really thinking about themselves in their trading. Fact is, folks, the only way we make money day after day, week after week, month after month, is by being consistent, and the only way we can be consistent is by avoiding the areas that do not give us an edge. Yesterday I was trying to remember a quote that I consider to be extremely important, and I found it early this morning, and I want to read it to you. It's from Charlie Munger. And if you don't use the FarnamBlog, which it's such a great place to read, just tremendous. They did an article on the Circle of Competence, and it was actually referred from another article, and I'll put that link down in here in the base of our description here when we're done. But it says, if you play games where other people have aptitudes and you don't, you're going to lose. And that's as close to certain as any prediction you can make. You have to figure out where you've got an edge, and you've got to play within your own circle of competence. And of course, Charlie Munger's an extremely famous investor. But I do want you to think about that carefully. For me, that's the bottom line for how it is that I trade. People come to me all the time and they go, hey, did you see yada yada yada? And I will say, you know what? That is just not my strength. So I do not trade in that space. I do not trade using those mechanics because I am not strong there. There are some people who can look at charts fundamentally, and 7-8 times out of 10 they can look at an earnings report and go, you know what, that's gonna blah blah blah, just by looking at things fundamentally. I'm gonna tell you something. I have no competence right there. But if you give me a chart and let me look at the technical formations, I can pretty much give you a good estimate of what it is that's going to happen. All right? So we learn our circle of competence. What I'm trying to say here is this. Listen, if you can't tell what the market should be doing, don't play in it. And don't be so eager to get involved that you forget that getting involved will lose you money if you don't know what you're doing. All right? So pace yourself through the motions and learn what it is that you're doing wrong so that you can stop that and keep moving forward. So let's take a look at today very, very quickly. I'm going to go to the hourly chart. We've got some formations here that, I'm sorry about the sniffles. Sometimes I get up in the morning and all I do is sneeze for like 35 minutes. I don't know why. All right, so let's try to get this chart doing the proper things. I seem to be looking at it. Yes, I'm doing it in the wrong way. All right, so here's our little box. We're in the channel. If we break out, let's take a look at what's happening here now. Look at the slope, hourly chart, pushing upward in this nice solid space, right? So we can see short-term activity allows us to trade upside, and now we're here in a zone that is usually very troublesome for holding upside formations. So what we need to do is be careful. If the levels come through and they break out to a new high, realize that the formations are suggesting that this chart has a propensity to roll over. So allow it to confirm or retest the breakout region. It's very, very important. We've got weekly pivots up to the north, and this shaded region is the collision area and the potential reversal zone for a very long butterfly, right? Since 2007, the end of 2007, this chart has been forming, and so we are in a space of decision making. So if you see it lose the level of support that it built yesterday, look to the left. You can see all of that. You know that you're going to overpower buyers who have tried to form this as support. If we lose that level, it's going to be shorting action. But notice, again, here's the little line. We've had upside momentum, right? See, I don't even know why I'm teaching this morning because I'm really strapped for time, but here we go. If we've got an RSI and it does this right here, right? And you see this, it's moving in completely the opposite direction, right? Divergence from a momentum perspective is usually the winner. And so if my chart is giving me a lower low, but I have got positive divergence, meaning my chart underneath here is showing me momentum is lifting, I know this is not a place to go short. You don't want to do that. You've got to get on the side that's moving so that you can get caught up in the swift motion rather than getting chopped up in any other place, okay? I put up the RSI here because a lot of people have trouble with interpreting the SMI, and so I want something simple for you. You can use that very, very easily. And just look at the trend. Draw a line through the bottom, draw a line through the top, or draw a line through the middle to see what's going on. And now all of a sudden, we're sitting up here at the top of the range. If we look all the way back here, we can see, wow, you know what? That's positive divergence, because the last time I came up here and tested these levels, I did not breach, and here I am breaching. So if it pulls back into support, which it will, because that's what it's looking to do. So here's the first level of support, R1. If it pulls back into support and bounces, we got a great trade to the upside. If it loses the level, guess what? It's going to fall right back down into the middle of the channel. So take a look at what the market is doing. Watch. Realize that if it does it once, it's likely to do it again. The market is not particularly unpredictable, but it does give us a pain in the neck if we don't understand the flow and the rhythm. And so that's what we're looking at today. Good luck with everything. Watch it breach the levels. If it continues to drift downward underneath from a momentum perspective, breaching the levels means that it's going to fail. Don't take longs in those spaces. You're going to have marginal or losing trades. All right? Good luck today. Happy trading.